This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Surprise move. China devalues its currency, causing concern in markets around the globe that the world's second largest economy is in worse shape than many think.
Old crime, new twist. The world of hacking is entering a new front, and it exposes a vulnerability within the financial world.
Little known benefit, why thousands of young children qualify to collect their own Social Security checks. All that and more tonight on Nightly Business Report for this Tuesday, August the 11th. And good evening, everybody. I'm Bill Griffith in tonight for Tyler Matheson.
I'm Sue Herrera. Good to have you along for the ride tonight.
Always.
Well, if China was looking to jolt the global markets, it certainly succeeded. In a surprise move, the world's second largest economy devalued its currency by nearly 2% against the U.S. dollar, its largest devaluation in 20 years. A weaker yuan would make China's goods more affordable to foreign buyers. So the move is being widely interpreted as an indication China's economy is in danger of a deeper slowdown. Those concerns sent stocks tumbling. The Dow Jones Industrial Average fell 212 points to 17,402. The Nasdaq dropped 65, and the S&P 500 sank 20. Commodities also came under pressure since China is a big buyer of them. Oil fell to a 6-year low, down 4% to 43.08. Crude was also pressured by a report from OPEC that showed output increased to a 3-year high in July. And it's not just stocks and commodities that are reeling. The impact could be wide-reaching. It was a shot literally heard around the world. On a down day, China's devaluation of the yuan is the anchor that dragged down stocks, bond yields, and commodities markets around the world.
I think it's screaming that China is in trouble. I mean, we've seen a series of data points out of China of serious slowdown.
Factory output is weak. Low inflation is making it harder for Chinese companies to pay off debt. And the government has been cutting interest rates while trying to fend off a stock market collapse. Now, devaluing its currency means Chinese exports are cheaper to buy. But the reverse is also true. Goods imported into China, especially commodities like oil and metals like copper used to make things, are more expensive. Companies sure to be impacted include Yum Brands, which owns Kentucky Fried Chicken, Johnson & Johnson, and Apple. All rely heavily on sales in China, but a weaker yuan means less revenue when their sales are converted back into U.S. dollars. Apple saw sales in Greater China, including Hong Kong and Taiwan, surge 112% in its most recent quarter. Overall, it does 27% of its business there. The lower yuan caused Jefferies to lower its target on Apple today by $5 to $130 per share. 17 of the top 20 S&P 500 companies with the highest sales exposure in China are tech. The biggest are Intel, which does 36% of its sales there, Qualcomm, which does more than 60%, and Texas Instruments with 44%. Overall, though, the S&P 500 has only 2% of its sales at risk in China, which leads to an interesting debate: just how much the lowered yuan will influence the U.S. Federal Reserve. Some believe it will be a big factor.
I think they're going to hold. I think this makes it, much more likely they're going to hold.
Others, not so much.
I don't think the Federal Reserve will back away from tightening just because of this one event, although there's lots else that could happen between now and the middle of September.
I don't think it really changes the equation. The Fed will be making monetary policy on the basis of U.S. conditions and because of U.S. policy needs.
So the real question may be just how much devalued yuan will affect the U.S. economy. And today, the U.S. Treasury said it's too early to judge the implications of China's currency devaluation, but the department said that it will continue to press China to move towards a market-oriented exchange rate, and that any reversal from that would be troubling.
Well, let's put it in perspective. Joining us to do that, tell us what it means for the U.S. economy and the equity markets and the Fed, Josh Feinman is Chief Global Economist at Deutsche Asset and Wealth Management, and Paul Christopher is the Head of Global Market Strategy at Wells Fargo Investment Institute. Welcome to you both. Thanks for joining us tonight.
Good to be here.
Thank you.
So, Josh, what do you think? There's an air of desperation to this when you put it in the context of all that they have done to try and shore up their stock market. Now they're trying to devalue the currency to spur growth. Do you think it'll work, and what is next, do you think?
I think that is the worry, that people are just concerned that China is slowing more than the official data kind of suggest, and this move kind of fuels that a little bit. That's the glass half empty. On the plus side, though, it's a modest move. It's not likely to move the needle dramatically on China's competitiveness. And keep in mind, one of the factors driving them is they are trying to move to a more market-oriented, flexible exchange rate so that they can move their currency to a global reserve currency status. So I think this does help a little bit in that regard.
And Paul, you think that this is a part of a longer-term strategy by China to remain competitive and also to move towards a reserve currency status?
That's right. The Chinese have a history of making important new reforms during periods when a particular sector is under some crisis. They did so with the banks a year or two ago when they lifted the deposit ceilings and the floors on lending. So this is the sort of thing that the Chinese authorities like to do in order to get more competitiveness. And frankly speaking, to show that the market that the yuan can move down as well as up is an important step in that direction.
Paul, the equity markets around the world sold off on this news. If they continue this devaluation of their currency, could you see more downside for U.S. equities especially?
I think the real risk here is that somehow China triggers a round of competitive or retaliatory devaluations and depreciations in emerging market currencies, which have already been weak. That sort of a retaliatory or competitive devaluation would end up putting pressure on the domestic economies in emerging markets that are already under some pressure. That could come home to produce slower global growth and hurt U.S. firms in that way. But I think that's a bit of a stretch and a low probability. China really has no interest in engaging in that sort of competitive devaluation. In the first place, China's more competitive now than it was before, and it's moving up the value chain. And secondly, China really wants to demonstrate to the International Monetary Fund and others that its currency is capable of being stable and therefore a good candidate to be a global reserve currency. So no, I think this is not a desperation move by China.
So Josh, weigh in on what this means for the U.S. Fed. Many people are expecting a rate hike in September from the Fed. Others think that the implications of this, of China slowing down, perhaps in some people's opinion, with this devaluation, puts the Fed on hold. What do you think it does, if anything, for the Fed?
Yeah, I don't think this event by itself really is going to dictate one way or the other. I do think the Fed is likely to raise rates before the end of the year. Whether it's September or whether it's Q4 is a close call. I lean towards September, but that's going to be dictated by the domestic data and sort of the Fed's judgment between now and then. I don't think that China's move by itself is really going to be the arbiter. Keep in mind, U.S. exports to China are about 1% of U.S. GDP. It's not likely to move the needle too much.
Josh, there'll be people watching tonight wanting to know what about their investments here in the U.S., if they're investing in China in one way or another, especially those multinationals who might derive a lot of revenue, Apple, I think of, or other companies like that. Does this give you pause, or do you buy bargains at this point, do you think?
I think you got to look at it on a company-by-company basis. But overall, there are some companies that are more exposed, to be sure. But I think the overall impact on the U.S. economy and the U.S. markets, once the dust settles on this, is not likely to be too much. I agree that we're not likely to see this round of competitive devaluations or the real currency or trade wars, something that could upset markets more. I think we're going to fall way shy of that. I think Chinese authorities are going to tread pretty carefully here. So I think in the coming days, things will sort of settle down. We'll focus back on the U.S. domestic fundamentals, which are not great, but they are improving.
And Paul, why don't you take the final word here? Do you think that this should or will change the Fed's perspective on their ability to raise rates before the end of the year?
Only if we were to see that unlikely case of a competitive devaluation or some other disruption that arises as a result of countries trying to out-competitive China or out-compete China. I don't think that's very likely. As Josh said, I think we're going to see the Fed focus mainly on the U.S. story as long as the global story remains orderly.
Josh Feinman and Paul Christopher, good to see you both. Thanks for joining us tonight.
Thanks for being here.
Well, the move by China to devalue its currency could possibly hurt Chinese consumption of luxury cars. Later in the program, we will take you to a plant in the U.S. that's now making and exporting cars to that country.
And now to another global hotspot, Greece. That country and its international creditors have agreed on the terms of a third bailout. The plan would provide the equivalent of $94 billion in aid in exchange for economic austerity. But questions remain about whether the deal will be ratified by other European governments in time to send the aid to Greece.
And now to the U.S. economy, where employees are working more efficiently. According to the Labor Department this morning, productivity growth increased to an annual rate of 1.3% in the second quarter. Separately, wholesale inventories rose more than expected in June, in fact, by the largest amount in more than a year. Rising inventory levels do suggest that businesses are more confident that consumer spending will increase.
It's an old-fashioned crime with a new twist. Regulators and prosecutors today charged a global group of traders and hackers in an insider trading scheme that allegedly netted the wrongdoers millions of dollars in illicit profits. Mary Thompson has the story.
There is a new front in the world of cybercrime, insider trading.
Today's international case is unprecedented in terms of the scope of the hacking at issue, the number of traders involved, the number of securities unlawfully traded, and the amount of the profits generated.
At a press conference, SEC Chair Mary Jo White detailing the workings of what she called a groundbreaking case involving a global group of 17 hackers and traders and 15 firms and funds. The SEC alleging they netted $100 million in illegal profits.
All companies should be vigilant. All of us should be vigilant in protecting our systems, taking measures to detect and guard against hacking.
The masterminds of the scheme, 2 Ukrainian hackers, the SEC alleges accessed company press releases before they were made public. The hackers infiltrating 3 wire services through malware and employee logins, then sharing the information with the traders who bought or sold companies' stocks or options before the release went public, closing out their positions soon after. The case highlighting the vulnerability of our interconnected financial system. And while banks and other firms spend billions on building their cybersecurity systems, cyber specialist Sean Henry says criminals are always looking for the soft spot in those defenses.
They're always going to look for the weakest link, the adversaries. And in this case, they targeted the news wires.
Over a 5-year period, regulators and prosecutors say the group traded on 800 different releases, most involving earnings reports of companies including Panera Bread, Caterpillar, and Edwards Life Sciences. And while the wire services kicked the hackers out several times, they came back, showing when it comes to cybercrime, persistence and patience can pay off for a while. For Nightly Business Report, I'm Mary Thompson.
And still ahead, the little-known Social Security benefit for children.
Shares of Google rose 4% today following the company's major restructuring effort that we told you about last night. The overhaul creates a holding company called Alphabet, and its new Google subsidiary will include search, its operating systems, and its high-growth YouTube business, which Julia Borston points out could now be more important than ever.
This move shines a spotlight on YouTube, an increasingly important part of Google's core business. Though YouTube tells me the division's revenue will not be broken out, investors are applauding this new structure on confidence that it will provide better insight into the growth and profitability of YouTube and the other ad businesses under Google's umbrella.
In the long run, as the advertising-based internet businesses, so which is to say search and YouTube and all, begin to slow down, they're going to have very different investment characteristics than the rest of Google.
YouTube was credited this past quarter by CFO Ruth Porat for being a huge driver of the company's upside surprise. She didn't reveal financials, but she said that YouTube's watch time has accelerated to its fastest rate in 2 years, up 60% year over year. while YouTube's top 100 advertisers are spending 60% more than they did last year.
They've created a business model there that I think, if you will, has some moral questions to it, because they're taking a huge piece of the pie, for content created and owned by others. It is nonetheless a spectacular business.
It's great to hang out with you today.
Looking forward to it.
Analysts are bullish that the new management focus will be beneficial, and they are hoping to get a better sense of YouTube's margins and how well YouTube is faring against Facebook as it invests more in its video ad platform. It's worth noting that YouTube, operating with its own CEO under the umbrella of Google, is sort of serving as a little bit of a model for what we're seeing now with Alphabet and its operating companies. It speaks to the success that YouTube has had with its operating independence. For Nightly Business Report, I'm Julia Borston in Los Angeles.
American Airlines reports an increase in traffic, and that's where we begin tonight's market focus. The carrier saw demand rise in July as more passengers flew American, and there were fewer empty seats per flight. Shares were 2.5% higher on an otherwise down day at $42.70. Meanwhile, a Japanese life insurance company will be buying the U.S. insurer Symetra Financial in a deal worth nearly $4 billion. That deal comes as Japanese insurers have been looking overseas for acquisition opportunities because of a declining aging population in Japan. Shares were almost 7% higher to $31.50 on Symetra. And the cybersecurity software maker Symantec is selling its data storage business called Veritas to Carlyle Group. Symantec will use some of the proceeds from the $8 billion deal to increase its own stock buyback program. The firm also announced quarterlies that missed estimates. The stock tumbled on that news, down nearly 7% today to $21.34. And on Friday, we told you about the reports that the credit card lender Capital One Financial was in talks to buy General Electric's healthcare finance unit. Well, today that deal is official. Price tag on the acquisition is $9 billion. Shares of GE fell 2% to $25.71. Capital One was almost down 2% as well to close at $80.87.
Red Robin disappointing investors as earnings were in line with estimates, but sales missed forecasts. The company also gave a pretty dismal outlook, saying it expects revenue growth for the year to be at the low end of its estimates. Shares slid more than 9% to $80.15. Towers Watson managed to post a beat on both the top and bottom lines. This is the consulting company that agreed to merge with Willis Group back in late June. Despite the beat, though, the stock was off a fraction on this down day to $125.13. Zebra Technologies reporting earnings and guidance that missed estimates. The printing technologies company did see sales rise as it benefited from the acquisition of Motorola's scanner business. Still, shares slid about 24% to $83.80. And Fogo de Chao, I love saying that name, posted an earnings beat in its first release since going public back in June. The Brazilian steakhouse also reported restaurant sales growth, but revenue and earnings fell from a year earlier. Shares were volatile in initial after-hours trading. By the close, the stock was up more than 2% to $20.
I'm glad you had to say that. As Social Security turns 80, its reach has grown. Now, last year, over 59 million Americans received more than $850 billion in Social Security benefits. And some 300,000 minors and children were also receiving benefits from a little-known portion of the program. And Hampton Pearson tells us about it tonight.
A hope of many years standing is in large part fulfilled.
Social Security today has grown and expanded in ways that Franklin Roosevelt could never have imagined when he signed the landmark legislation into law 80 years ago this week. In recent years, the financial crisis forced baby boomers nearing retirement age to look for new ways to maximize their Social Security benefits. One of the more creative solutions from financial planners, a little-known loophole sometimes known as the Viagra College Fund. People who've reached the magic age of 66 can file for benefits, triggering a 50% monthly payment to any minor dependent children until the child reaches age 18. For example, when Dad turns 66, he's entitled to, let's say, a $2,000 a month benefit. His child gets $1,000 a month until age 18. Put that in a 529 college savings plan, and even a Harvard education becomes affordable.
This dependent benefit doesn't care how rich you are, doesn't care how much you need the benefit.
Right now, Social Security estimates there are more than 300,000 children of retirees receiving benefits, and the number could go higher. But small changes to Social Security have been a challenge for reformers because the savings are minimal.
Social Security is usually kind of treated as sacrosanct, and we only reform it when we're really going to reform it. We need to do that soon. We need a big package, and that might be an opportunity for some of these small reforms. But I don't see much of a chance of them kind of going on their own.
Bernie Sanders favors lifting the income cap on the payroll tax.
A Wall Street CEO who makes $20 million a year pays the same amount into Social Security as someone who makes $118,500.
There is a challenge to the FDR legacy on the horizon. Social Security trustees say the Disability Fund, part of the massive program, could run dry by the end of 2016. For Nightly Business Report, I'm Hampton Pearson in Washington.
Well, to read more about this Social Security benefit, you can head to our website. We have it there at nbr.com.
Coming up, a car that's made in America, heading for China, and creating jobs in the heartland in the process.
Here's what to watch tomorrow. Dow component Cisco Systems reports its earnings. The Labor Department releases its job openings and labor turnover survey for the month of June. And the Federal Reserve Bank of New York president, Bill Dudley, is scheduled to speak tomorrow. That's coming up. What to watch for on Wednesday.
The number of complaints that passengers filed against airline carriers rose by 20% this year. That's according to a Department of Transportation report. The two most popular complaints were flight disruptions and baggage problems. The government agency also ranked the best and worst offenders in terms of arriving on time in June. Hawaiian ranked best, Alaska came in second, Delta was third. The worst airlines, Spirit, United, and Frontier.
Auto sales in China, the world's largest auto market right now, hit their lowest levels in almost a year and a half. The China Association of Automobile Manufacturers said that retail sales of passenger vehicles dropped about 6.5% last month. It was the third time in 4 months that auto sales have declined in that market.
And China's move today to devalue its currency by nearly 2% could potentially cut into Chinese consumption of luxury cars. But that's not stopping a Midwest assembly line from operating in overdrive. In fact, one automaker is turning to an old Hummer plant to help it with production. Phil LeBeau has the story tonight from Mishawaka, Indiana.
It's a sign of how far the auto industry has come in America. The Mercedes-Benz R-Class, which is only sold in China, now rolls off an assembly line just outside South Bend, Indiana, at a plant that once cranked out the Hummer.
We're not really just focused on the past, the Hummer and the H2. We're looking to the future. We're looking at the front windshield, not the rear view mirror, and we think it's going to be a great ride.
The R-Class is now built here because the Mercedes plant in Alabama, which has long been its hub for SUV production, is running out of capacity. And with demand for utility vehicles running high, thanks to low gas prices, Mercedes turned to the old Hummer plant for help. Welcome news for several hundred hired to work the line.
We were just ready to get back into the plant. I mean, we love the work here. We love how this facility is. We were excited for it.
Fact is, many auto plants in the U.S. are close to capacity as the industry moves fast to keep up with strong sales, not only in America, but around the world.
The peak hasn't been reached yet. We're seeing average age of the vehicle is well over 11 years on the road, so more demand and production coming here in the U.S.
Made in the U.S., headed for China, from a plant humming with activity once again. Phil LeBeau, Nightly Business Report, Mishawaka, Indiana.
And that's Nightly Business Report for tonight. I'm Sue Herrera, and we want to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith. Thank you for watching. Have a great evening. We'll see you tomorrow.